Welcome back to my YouTube channel. If you are a new subscriber, make sure to subscribe. And today I'm going to do something special. I'm going to show you how I enter my trades on Shao USD Gold using sniper entry strategy. This is my own and I have not copied it from somebody else. So let us now focus on this sniper entry, which focuses on liquidity on gold. If you pass through my videos, you always see that I always start my setup on a higher time frame. Let's say we have something like monthly. After doing my setup on monthly, I go to weekly, then daily time frame. These are to me are the most important. Why? Because I mark the high and the low. Also the weekly time frame, I mark the high and the low. Also the daily time frame, I mark the high and the low. So if the monthly time frame, let's say it was bullish, what I do, I mark the high and I also mark the low. I call it monthly high. What I expect price to do is that, let's say this was the opening price, around here was the opening price, and this is the closing price. So in the coming month, price will open around here, maybe retrace a bit, but what I'm expecting is that price to grab the monthly high because it is a bullish month. So we'll be having something like this. Yeah, price open around here, grabbing the monthly high. Same to weekly time frame, daily time frame. But let's say when the monthly time frame was bearish, what do? I mark the high and the low. I call it monthly high and monthly low. If it is bearish, I'm expecting the bearish move to, I'm expecting the monthly low to be grabbed. Okay, guys, the monthly low to be grabbed, and we see bearish continuation. Let's say you're having market structure, you're on a bullish move, the market is forming higher highs and higher lows, higher highs and higher lows. This is the new high being grabbed, the new high has been grabbed, the new high has been grabbed. So we want to know how do we get this entries. The first thing I use is a tool called Fibonacci retracement. The second one, it is called double Fibonacci retracement. And then the third one, the volume indicator. These are the three tools that I use to get a sniper entry. So let's go to the red chart and I show you how I do these things. First example is this one. Price was moving higher. Then all of a sudden the buying pressure decreased. Price make the last high, then continue grabbing this small low around here. After seeing this, what I look for first is what I want to look first is something called trend reversal. I be patient and wait for something called trend reversal. So as the market continue going down, you can see it make the last low, then this is the last high, then a big low. Trend reversal is found where there's a big selling pressure like here. You see, this is the last high, then there's a big selling pressure. We're interested with this area, big selling pressure. That's where we're interested in. So what do? I told you my first thing to do, I take my Fibonacci retracement and let me show you how Fibonacci retracement is used. This 1.618, it allows us to see where we can take the profit. Okay, I will show you how to use it. This 1.1, this here, it is the middle point. It has nothing to do with take profit or stop loss, but it's where we start to place our Fibonacci retracement if we are to sell. Okay, this 0.786, it is for trend reversal. Okay, 0.618, it is usually used on a lower time frame to get a sniper entry. 0.5 used in higher time frame to get entries. 0.3, this is how we get the higher highs and higher lows. If price has not reached the 0.38, that means it, example, let's say price has make high, it must reach 0.382 for it to be considered a low. Okay, then a high. But if price reach 0.23, it is not considered it is not considered a low, especially on lower time frames. Okay, then 0 is a neutral is 1. So in this case, we want to use a trend reversal tool. So a trend reversal tool is 0.786. So we have this high, we have the low. Then let's confirm if this one is a high. We take this high to this low. As you can see, this is a new high because it reached 0.382. This is our new high. So before that, we want to get a trend reversal. So we will take our fib retracement from this high to the low. Okay, what are we getting? Fibonacci retrace to 0.786, which means we have a trend reversal. As you can see, it is a good sniper entry. Another confirmation is there is a fair value gap around here. Fair value gap around here. So if we sell, let's say we are taking a short position, our stop loss should be tight, not big. I always put my stop loss above the last candle where I'm taking the buy. So let's take the stop loss from this high there. So if you want to know where to take profit, I told you you can also use Fibonacci retracement. How do you do it? So you take Fibonacci retracement from where you're taking the trade. Let's say here, we're taking the trade here, and then watch this. We are targeting the last high. Here is the last high that way. So I want my Fibonacci retracement. I told you 1.618 is where we target our take profit, but in opposite direction. Okay, let me show you how it works. So let's say you have taken your trade around here. So you want this 1.618 to touch this blue line, the last high. Okay, and this 0, it will go down. And when this 1.618 touches this blue line, it will be our take profit. Okay, let's push it down. Yeah, as you can see, 1.618 has touched this blue line. So we mark this low where 0 is, around here, around here. So our take profit will be this area, and we have a good sniper entry from a 15 minutes time frame. So the risk was 1:6. As you can see, it gives us a small stop loss and also a big take profit. Let us look at the next example. So the same view, price from the low and then the high. This is the last high, this is the last low. So there's something called double Fibonacci retracement. Double Fibonacci retracement. You have this high. I told you I use double Fibonacci retracement, I use volume, and I use Fibonacci retracement. You have this low, then you have another high, and then the last low. So we mark the last two high, then the last two low. So we take our Fibonacci retracement from this level to this level. Okay. So the first one is this point and to this point. And here we mark 0.5, 0.5, which is this one. I take a line and mark 0.5. So after that, to confirm my entry, I take my Fibonacci retracement to low, okay? And I want to target either 0.618, which is this one. As you can see, it aligns with the 0.5. So I mark this level as my sell zone. So what do we do? When price reaches this level, we take our short position around there, and stop loss should be above this high, this candle. But where we really put our take profit, that's where Fibonacci retracement comes in. We take our Fibonacci retracement from where we have entered around here and to the last high, okay? To the last high. In this case, our last high was around here. This is the last high. So this 1.618 should touch this blue line, okay? Let's drop it further. Nice, it has touched it, which means our take profit will be this low. We target this low. So let's extend it to this low. And as you can see, price rallied up to this low. And it is a good sniper entry. The last example, we are only going to do trend reversal. Let's say price was in a upward move. You can see upward move. Then price came here, then go up, then it grabbed this low. After grabbing this low, what do we look? We want to see if there will be a trend reversal and continuation in sales. So what do you do? I told you, you take your Fibonacci retracement from this last high to this last low. If you're looking for trend reversal, we use 0.7. Yeah. So from this high to this low, looking for reversal. 0.71786. 0.786. We mark it. And do we have another confirmation? Yes, there is a fair value gap around here. So we mark that low and we take our tool. We want to know where we put our take profit. So we mark the last high, which was this one, the last high. So we take our Fibonacci retracement from our entry. Then 1.618 should touch that. 1.618 should touch that line. Okay, there we go. Then we mark our point zero. We mark our point zero. That will be our take profit. So we take our short position. Remember, our stop loss should be this, above this red candle. So you can see it is a good sniper entry, and we went to 1:4 risk to reward. So that's it for today. But this is how I trade gold when I want to get sniper entry and put a small stop loss. And this setup always appears every day on gold. So if you want more of this, you can subscribe, and I will be posting these videos after 3 days. See you guys. Make sure you subscribe and share, and tell me what you want me to post next on the comment section. Goodbye, guys.